Welcome back to Yahoo Finance, everyone. We're talking Twitter. The company posted its biggest intraday surge since IPOing in 2013, and it's thanks to Elon Musk and his 9.2% stake in the company and signs of a possible shakeup ahead. Well, let's break that down with our next guest, Mandeep Singh, senior analyst and TMT team lead at Bloomberg Intelligence. Thank you for joining us today. So, Mandeep, what should we make of this stake? How do we think Elon is going to navigate this?
Well, so look, he hasn't done this in the past in terms of taking such a big stake. So clearly, a lot of it is driven by his personal feelings about how the product ought to look like, who should it serve. And I think what he's trying to do is to influence the strategy of the company, the board composition. We don't know exactly if he has a different CEO in mind, given the company has already been through a management change recently. But clearly, he has views around how Twitter should serve as a platform for free speech. And I think you are going to see some board level changes that will drive some more product changes eventually.
And in terms of how this works with obviously the friction that he's been having with the SEC, how do you see this move potentially, if he does intend to shake up Twitter, how do you see that affecting that relationship?
Well, so yes, he has been in controversies, and you mentioned about the friction with the SEC. Look, I think anytime you have a platform like Twitter, you have to ask yourself, who defines the rule, and what will happen to Section 230, and how will that influence Twitter's positioning? So that isn't going to change, but at the same time, now that he has such a big stake in the company, he'll probably be a little bit more careful. That's my sense. And my hope is, he's not going to randomly tweet about something tomorrow that could have an influence on the stock.
And do we know perhaps the likelihood of him perhaps making a move to make Twitter private?
Well, so that is clearly an option. And one of the things that is on the table is a buyout, a full-fledged buyout of the company. We have seen that happen with some other tech companies in the past. And in this case, you could argue that he definitely has the power to take the company private on his own, for that matter. But at the same time, there have been rumors about Salesforce or Disney, being interested in buying Twitter. So there are clearly, players that have shown interest. In terms of what would be the catalyst, my sense is if the company continues to underperform operationally, then there is a case to be made that it can be taken private.
And do we know, if you're a Tesla shareholder and you're watching this stake and you're hearing about this possible shakeup, if you're watching what he's doing with Twitter, how do you think they're reacting to this?
Well, so I think they probably don't have to be worried as much until he shows interest around running the company on a day-to-day basis. And we saw the kind of backlash Jack Dorsey had to face, when he was the CEOs of both companies. So as long as he stays passive and he's influencing the board composition and let somebody else take care of the strategy, I don't think the Tesla shareholders have a lot to worry about here.
And in terms of how this might affect perhaps other social media platforms, how might that affect that landscape?
Well, so my sense is probably, this is sort of calling the bottom because we've seen how far the pendulum has swung for the digital ad companies. They were probably, at their peak of the valuation 6 months back, and now they have gone to the other end of the pendulum. So in terms of, the growth prospects, digital ad market is a very stable, low to mid-teens end market, very large addressable market. And look, even though we've seen Meta and Snap come down so much, the fact is, it like digital ad as a sector continues to be quite robust. Yes, it's tied to GDP, but there is a floor when you think about the valuation in this space, and the timing may have been influenced by the fact that these companies are trading at a much lower multiple than they were in November.
And do we have a sense of when he might go perhaps from being a passive investor in this space and the impact that might have?
Well, so he has almost, a 9% stake. And as I said before, he's going to influence the board in some capacity. Whether he likes the existing management is the key question. Does he think they can execute in terms of the things that he wants the company to do as a large shareholder? And that is where I feel, at some point, if he finds the management isn't delivering, he may become more active in terms of actively driving the board changes.
So when you look at some of Elon's mentors in this space, does that give us a better idea of perhaps what he might do with Twitter?
Well, yes, there have been examples, of activist changes in the past and his mentors being involved in some of those. And clearly, I think there is a case to be made here because Twitter stock hasn't done anything since going public, and Twitter has been public for almost 10 years now. So there is a case to be made in terms of evaluating the options, but he's not thinking about it in terms of shareholder return. He's thinking about it more in terms of what the platform ought to be doing better. And that is where the contrast is between, an activist like Elliott or Silver Lake, which is more focused on shareholder returns, the buybacks or the free cash flow, whereas Elon is focused more around, what Twitter needs to serve in terms of being that platform for, news and all the live events.
That is an important distinction. I do appreciate you joining me today. Mandeep Singh there, Senior Analyst and TMT Team Lead at Bloomberg Intelligence. Thank you so much.